the street was working with.
Okay, and the SBI management is addressing the media. Let's cut across.
And the domestic economic scenario, and then discuss bank's performance. Global growth is expected to remain stable, though somewhat underwhelming, with the cementing of growth in the largest economy of the US being a silver line. The recent US election results could lead to lower taxes, favorable regulations along with tighter labor markets. They also present an opportunity for the Indian economy to further strengthen the domestic manufacturing base while closely aligning with strategic allies. Further, any positive development on the geopolitical situation in areas of conflict could lead to easing of commodity prices. On the other hand, the EU bloc appears still shrouded in uncertainties. The global growth forecast by IMF for 2025 remains at 3.2%, with India remaining the fastest growing large economy. In domestic economy, India's GDP registered a growth of 6.7% in Q1FY25, driven by private consumption and investment. Looking ahead, agriculture sector is expected to perform well on the back of above normal rainfall and robust reservoir levels, while manufacturing and services activities remain steady. On the demand side, healthy Kharif sowing coupled with sustained momentum in consumer spending in the festival season augur well for private consumption. The average inflation for FY25 is expected to be 4.5% according to RBI estimates. Latest numbers show that scheduled commercial banks' deposit growth has now surpassed credit growth. Deposit credit differential has now turned positive, which was last seen in April 2022. We expect scheduled commercial bank deposits will grow 11 to 12% and credit by 12 to 13% in FY25. RBI has ensured that system liquidity remains comfortable by conducting two-way market operations. As far as our bank's results is concerned, we have once again delivered a good set of numbers. At the end of Q2 FY25, our credit growth was 14.93% year-on-year. Deposit growth was 9.13% year-on-year, while the CD ratio domestic is at around 67.87%. Importantly, our slippage ratio was 0.51%, with retail slippage ratio at 0.31%. Credit cost was 0.38% and PCR is all-time high of 75.66%. The profit for the current quarter is 18,331 crores, up almost by 28% year-on-year. As far as in the part of business growth, I would like to make a special mention of the deposit growth, which we've been very seriously pursuing. At the end of Q2 FY25, deposits have crossed a milestone of 50 trillion rupees. I think this is a milestone which we crossed, and we stand at 51.17 trillion. We serve more than 50 crore customers. We are humbled to serve 1 out of every 3 Indians, but I take pride in saying that SBI in some manner touch every Indian family. The total deposits have grown by 9.13% year-on-year to 51.17 trillion. Term deposits have grown by 12.51% in year-on-year. Our current account deposits have grown by 10.05% year-on-year. And CASA remain at, grown by 4.24%, and we have maintained CASA ratio at more than 40%. So this is a good deposit story in our view. As far as credit growth is concerned, I am pleased to advise that the credit growth continues to be robust across all segments. Our domestic advances have grown by 15.55% year-on-year, driven by 18.35% growth in corporate, 17% in agriculture, and another 17% in SME, and 12.32% in retail segments. Our foreign offices advances have grown by 11.56% year-on-year in rupee terms. As regards asset quality, slippage ratio, as I mentioned earlier, is 0.51%, while the credit cost for Q2 FY25 stood at 0.38%. The net NPA ratio improved by 11 basis points year-on-year, stands at 0.53%. We have a well-provided NPA book, as mentioned earlier, with a PCR of 75.66%. These indicators of asset quality highlight the robust quality of our loan portfolio. As far as liquidity is concerned, our liquidity position is comfortable, with the liquidity coverage ratio being about 129% as on 30th September, while the domestic CD ratio was at 67.87%, indicating a significant potential to grow our credit portfolio. The bank remains well capitalized, and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio is at 13.76% without considering plowback of profits, and is well above the regulatory requirement. And if we include the profits for H1FY25, our CAR would be at 14.79%. As in the digital journey, I'm happy to share that the progress we are making in digital banking is paying dividends. More than 8 crore customers have been registered on YONO, driving digital agenda of the bank. 61% of regular saving bank accounts are opened through YONO in Q2FY25. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders. We will nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that the bank continues to report ROA and ROE greater than 1% and 20% respectively at the end of half year FY 2025.
That is State Bank of India. It's been a good quarter for the company, in line, decline in slippages, but perhaps the stock has been, priced in all these numbers. As Nigel pointed out, it moved up nearly 10% in the last 1 month. So how should you position?
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.